I'm afraid to lose money, said a smart and driven mother of three when I asked her recently why she's not investing. Why do you think very few people, especially women, use investing to grow their money and create wealth, and therefore are missing out on the market's best returns? I believe one of the main reasons is fear. Hi, I'm Millen Livis, holistic financial independence mentor, and today I'll share with you 5 hacks to reduce this fear of investing. Grow your wealth, live on your terms. Stock markets are booming. Since the pandemic outbreak about 18 months ago, the S&P 500 index has gained as much as 98%, which is on track for the most record highs since 1995. And it's not just stocks hitting all-time highs. Real estate, commodities like copper, aluminum, cotton, etc. are booming too. Cryptocurrencies, after yet another correction recently, started rising as well. Bitcoin dropped from its top price of 62 or 63K this year to almost below 30,000. And today it's over 45,000 again, 50% increase. Unfortunately, many average investors and especially wannabe investors haven't enjoyed these spectacular returns. So why the average investors are doing so average and even poorly when markets are making new all-time highs? Fear. Specifically, fear of losing money. You see, the fear and bad past experiences shake many investors out of the market. Or worse yet, they enter the market at the top and sell at the bottom. Remember this. The greatest opportunities often come from new or hated by the crowd ideas. And when the risk is off, market panic escalates and fear runs high, that's when people are most uncomfortable, yet that's when is the best time to invest, to buy. So today I'll show you my 5 hacks to conquer the investing fear by making more rational investing decisions and not emotional, and protecting yourself from the greatest risk of loss while positioning yourself for the greatest opportunity for gain. 5 hacks to reduce the fear of investing and position yourself for financial success. Hack number 1. Diversify your assets. In short, diversification is the secret to building wealth and, most importantly, keeping it. And it's also one of the risk management tools. That's why I keep talking about the benefits of diversification over and over again, because it is so important. All right? I like a mix of stocks, real estate, cash, bonds, precious metals, collectibles, cryptos, and other alternatives. Not only diversification leads to better returns, but it also lowers your investment risk. Numerous studies show that asset allocation accounts for over 90% of your investment success. All right, moving on to hack number 2, invest long-term. Unless you are a day trader, daily volatility should not bother you at all. Markets fluctuate all the time. So don't get distracted by the short-term performance noise, because that's what it is. It's just performance noise. The market's short-term direction is unknowable. Unknowable. Any headline or macro event can shift the market trend. Even experts get it wrong more often than they get it right. So focus on the big picture. Hack number 3. Hack number 3 is develop investing discipline. Here's what I mean here. Decide and implement regular contributions toward your investment accounts. set up a direct deposit in your taxable brokerage account. You can start with 100,000 or 50,000 a month. Choose a comfortable amount that won't impact your daily life, and take advantage of your retirement plans like IRA or 401k, where you allocate part of your pre-tax paycheck to investments. And that's why that's the only advantage, that it's a pre-tax money, especially if your employer matches your contribution in 401k, which is rare these days. Personally, I prefer IRAs because you can choose what to invest in, versus 401ks usually give you limited choices, and usually it's mutual funds, which I don't like. And if you currently don't need income, make sure to set up your account to Dividend Reinvestment. It's a setting of your account for all your ETFs, mutual funds, and dividend-paying stocks. Okay, so you will accumulate shares. Hack number four is use risk management tools. There are various ways to manage investing risk, including what I already mentioned. But it's so important because you not only grow your wealth, but also protect what you have, which is more, I don't know if it's more important, but it's as important as grow your wealth. So the best way to do this is with position sizing. Position sizing is one of the risk management tools that refers to the size of a position within your portfolio, or the dollar amount that you're going to invest in one position, like particular stock or particular ETFs, etc. If you find that you cannot sleep at night, then you probably have too much invested in one idea. My simple rule of thumb is, if an investment in my portfolio is not performing, my maximum loss should be no more than 1 to 5% of my portfolio's value. Here's the rationale for this rule. If you limit your downside, then you can sleep at night knowing that you limited your losses. This way, you won't panic sell at the worst time, which happens to many, especially new investors or emotional investors. Hack number 5 is create a plan and stick to it. You probably heard many times, when you fail to plan, you plan to fail. So create your investing plan, review it, and rebalance it periodically, but stick to it. Stick to it. For example, and it's very simple, set up a goal of how much you want to invest every year, or commit to raising your direct deposits $50 per month or a quarter until you reach your goals. And consider adding new investment ideas to your portfolio. Now, if you happen to have a life-changing event, or maybe you're planning to have a life-changing event, reevaluate your plan at that time. However, sticking to a plan will keep you from making emotional investment decisions, both buying and selling, and that's the biggest threat in investing, making emotional decisions. I've been there, done that. That's why I'm warning you today. So the bottom line is, if you implement these 5 suggestions, you'll be able to ride the stock markets to new highs without getting shaken out during times of volatility. And frankly, historically, in high inflationary environments, which we anticipate these days, this time, stocks seem to be more volatile. Now, I know that these 5 suggestions may seem daunting. Maybe not, I don't know. And you may think easier said than done, right? So I challenge you to put these suggestions into action now and share your actions in my private Facebook group, Wealth Building for Powerful Women. And here's the link to this group. Okay, now it's the right link. So look, it's not that hard to train yourself to become a mindful and strategic investor. Before you know it, not only will you outperform the average investors, you'll also significantly move the needle on your financial net worth. Let me know in the comments if you got any insights or ahas or maybe got triggered from this mini training. And I already mentioned, if you'd like to join the community of like-minded people and be able to get live support, like ask questions, share challenges and your wins, join my free Facebook group, Wealth Building for Powerful Women. You have the link. Thank you for joining me for this mini training today. Thank you for your time. Join me next week for another financial mini training episode. Have a fabulous day to your health, wealth, and freedom.